The creation of a financial ombudsman to handle customer complaints pertaining to malpractice by digital lenders is one of the ideas that is gaining traction both among members of parliament and the Digital Lenders Association of Kenya. PricewaterhouseCoopers has released a comparative study on the regulation of digital lending. Here is Alex Mwangi with the highlights of its key recommendations.
Digital lenders in the country have grown by leaps and bounds in recent years, but so too has a reputation of nastiness among some of them, prompting calls for stronger regulation.
The issues of data protection, we were having discussions with people who said that, when my brother takes a loan, I receive a message, that he took a loan, and maybe, or the boss receives a message and that kind of thing.
A comparative study by PricewaterhouseCoopers on the regulation of digital lenders proposes the development and enactment of a consumer credit code that embeds the principles of consumer protection in lending. PwC recommends that the code be vested in a regulator such as the CBK or another agency, and that it should provide for registration but not necessarily the licensing of consumer credit providers. The study also proposes having a financial ombudsman to assist in streamlining the issues facing unregulated lending.
Poland, being a member of the GDPR, has strong data protection regulations. So on the dispute resolution, they have a public ombudsman specifically for customers of financial institutions. And what this has done for them is it's eased their backlog in traditional litigious institutions.
We need to ensure that the consumer understands the consequence of not paying back a loan. The CRB framework is a very vital asset, is a national asset, and we need to stop using it as a tool to punish and more as a tool to enable SMEs.
One of the challenges in the unregulated digital lending space has been the information asymmetry, which is skewed in favor of the lenders.
Transparency in pricing as well, disclosure of key terms and conditions, restriction on certain debt collection practices. We want to have marketing guidelines as well, which would state when you can advertise, to whom you can advertise, because you also don't want a vulnerable segment of the population being exposed to what ordinarily is a beneficial and financially inclusive industry, but they may not be adequately informed.
Currently, there are two bills before the National Assembly that could offer the much-awaited legislative guidelines for digital lenders.
We also have the other bill by Honorable Gideon Keter, and the efforts we will be making is to have conversations with Honorable Keter so that we have just one bill that carries everything.
The comparative study by PwC looked at the regulatory models in 11 jurisdictions, namely Australia, Egypt, Uganda, India, Mexico, Nigeria, Poland, South Africa, Spain, the UK, and Singapore. The Digital Lenders Association of Kenya currently lends to 6 million members monthly. Alex Mwangi, NTV.